Welcome back to Texas Capitol Live. We had a little bit of a technical difficulty there. We got it figured out. Glad to get the show going. We're here on November 19th, 2025, live from Dallas, Texas. I'm Steve Kennard, president of the AI Innovation Association. I'm joined by Lee Bratcher, president of the Texas Blockchain Council, and our entrepreneur in residence, JBA, also on the show today. Lee, give us a rundown of the show, and then we'll get back up and going here.
That's right. We've got a busy show today, a lot of market updates. Market's still selling off. So in market momentum segment, we'll talk about that. You and I will debate a little bit about NVIDIA. We have a different view about where NVIDIA is going to go after the earnings. At markets close today, earnings come out, and tomorrow the options traders are looking at about 7% swing. There's just a lot of difference of opinion about whether that's going to be an up or down direction. Kennard's Corner, you're going to be talking about somehow we work Sweetgreen into this thing. You know, their stock price has been tanking, as have a lot of these fast casual restaurants. Texas Market Brief, we'll be going through some of the big market moves in the state of Texas. Google, $40 billion investment in AI data centers here in the state. Couldn't be a capital market show without talking about the Texas Stock Exchange. They're in the news again today. Then we'll go over to Kalshi for our prediction markets segment, where we talk about what are the prediction markets telling us about what the Fed is going to do, who's going to win the Super Bowl, all of those things. Policy updates, and then we want to hear from you guys, whether you're watching on X or YouTube or LinkedIn or Rumble. Ask a question, ask a comment. Bryce is going to look them up. We're going to answer those live on air. Steve, tell us what the markets are doing this morning.
Yeah, so I think the story of the week has just been this continued bearish sentiment. The fear meter's kind of off the charts, and there's red pretty much across the board. Bitcoin has broken that $90,000 level. So just a few days ago, we were talking about 100,000, seeing if it would hold there, and we continue to see kind of downdraft in Bitcoin and really a lot of volatility in that market. On the other side, though, interestingly, you've seen kind of a bifurcation because gold has actually held steady and traded up over 4,000 and is there today. So it's kind of emerging as a preferred safety asset right now. And you're really seeing a disconnect historically from the way that it's traded vis-a-vis Bitcoin. I think that's going to be a story in the coming weeks. We'll continue to discuss that more. But really, as it pertains to the stock market, the news of the day, as you already referenced, is NVIDIA with earnings coming out today after the market closed. But there's already all kinds of speculation of where that could go, how it could drive the market. Everybody's got an opinion, us included. NVIDIA's up just over 2% right now, so a bit of a bullish outlook. And here's kind of where my outlook is going into this. NVIDIA's got however many quarters, it feels like forever now, that they announce that they beat estimates. They had some huge deal that they just, everything positive, the best story you could possibly imagine in today's stock market. That's been NVIDIA quarter after quarter. I'm going to go ahead and say it. I expect that to continue. There have been so many different deals that I don't even think I could name them all between OpenAI and Anthropic and all of the circular investments that have been done. Mm-hmm. But my outlook at this point is it feels like there's almost nothing NVIDIA could do. Nothing more they could announce. Like the hype machine has gone as far as it's going to go. And it just feels like the market wants to go lower. That's what I'm going to expect. As you mentioned, the options traders, there's an outlook of we're going to see volatility up or down.
That's right.
There's kind of no flat outcome here. I have to lean towards the negative on this. Doesn't mean I don't think NVIDIA is a great business. The cash flows speak for themselves. That's remarkable. It's just this landscape that we're up against. I feel like we wake up tomorrow and it's going lower, and NVIDIA really can't do much of anything at this point to stop that.
Yeah, so my view is a little bit different. Before I get into it, we've got our normal disclosure. Texas Capitol Live provides commentary for informational purposes only and does not constitute in financial, investment, or legal advice. Viewers should consult their qualified professionals before making financial decisions. Now let's talk about stock moves.
Yeah.
I think it's going up. NVIDIA is the world's most valuable company. I guess publicly traded company. Saudi Aramco is...
They're up there.
They're up there with Saudi Aramco as a private entity. I know part of Saudi Aramco was floated on a stock exchange recently, but so NVIDIA, they have no competitors still. Mm-hmm. AMD, SMIC, all these different companies are racing.
They have aspiring competitors.
So if you don't have any competitors, you have a lot of market pricing dominance, and I think they're going to be able to command a ever higher price for their latest chips. So that piece combined with this insatiable demand for the models all of the best models are doubling in performance every 7 months. To double in performance every 7 months, the way that you manipulate, the way you train, the number of parameters, that has to increase. But you know what also has to increase is the amount of compute. And so NVIDIA's machines are going to be in high demand. I think they're going to beat earnings expectations, and there won't be a lot of other places for investors to put cash, and NVIDIA is going to continue. I don't bet against NVIDIA anymore. I shorted them a couple years ago and learned the lesson not to do that. Painful lesson. We'll no longer be shorting NVIDIA.
This is one of those moments where honestly, it's like I hope I'm wrong, because I'm not out here rooting for a market pullback or a bloodbath or any of that we've seen recently. But it just feels too shaky for me. But who knows? Jensen, the CEO at NVIDIA, he could always have an ace up his sleeve. Some other headline that comes out, and we turn a corner here, and this kind of pullback goes into the rear view mirror. No matter what, though, going into this, it's kind of like all eyes on NVIDIA. So as a company, they got to love that. I mean, they've got the attention of the world, and frankly, they've earned it because of what you said. They have no competitors, and they're driving the central technology, driving the economy right now, which is AI. I want to pivot, though, to the segment we're calling Kennard's Corner, and I spent a little time thinking about what would be interesting to talk about. Well, I'm going to take a minute to talk about something that's not AI, actually kind of the opposite, which is very much in the physical world, and that is the protein economy. Now, in recent years, there's been this kind of incredible, I'm going to call it a protein bubble. It's definitely a fad of it feels like everything's got protein in it now. Every brand's trying to say, well, if we put protein on our packaging, that means healthy, or that means better, or maybe tastier. I had to put together a couple examples here, and JB, if we can put up this image of a couple of the brands and items that are out there in terms of this economy. We've got protein cereal now that you have numerous different brands that have gotten into the protein cereal economy, and you have protein pasta, which I don't even know really at that point pasta's always been like a carbohydrate food, so I don't know when that pivoted to being a protein food, and you've even had protein waffles and pancakes. So there's like all these different people trying to claim the moniker of like we're the most protein thing out there. I think that maybe the most surprising one is the protein tortilla chip. I had never seen this. I had to go out and look this morning. This is a brand called Quest, and they're taking tortilla chips, and I don't even know what kind of protein is going in there, and they're claiming 17 grams of protein per serving, which is quite a lot. To me, the issue here is most of the time with these types of products, it's like the protein gets added, but the product itself is not tastier. There's like an initial bump from people that want to consume it just from this protein angle, but it doesn't really actually taste that good. At least that's been my experience. I can't say I've tried the tortilla chips. So now on the flip side of that, I want to talk about a company that's been in the headlines a lot, and that's Sweetgreen. Sweetgreen's kind of one of these fast casual cafes. I think it started in California, gained a lot of traction in California and New York around being healthier food. And they've recently come out and kind of joined the protein wave with their Protein Max Bowl. And this was kind of all over X yesterday. And I want to play a video to sort of show how this launch was presented to the public.
Over 100 grams. Over 100 grams.
Too much. A little too much.
All right, so Lee says it's a little too much. I think it's a funny ad that kind of grasps this moment of the over-the-top protein craze. The guy's literally turning into Hulk in the office. Made me laugh. So at first blush, I see this, and I'm like, this is just, it's gone too far. This is absurd at this point. But now I'm gonna kind of take the contrarian perspective here, because I myself, some months ago, tried to pay more attention to the food that I was eating, and the primary approach that I had that was most effective for me was to pay attention to my protein intake. And typically, you talk to a nutritionist, a target is to eat 1 gram of protein per pound of lean mass in your body. So I went and had the test done, and I was at like 180 to 185 pounds of lean mass. So that's 180, 185 grams of protein a day. It was really hard to eat that much protein.
Yeah.
But when I was paying attention to it, honestly, I'm going to say I felt a lot better. And I was able to more regularly go to the gym and all of that. And I was enjoying it. And I just fell out of it because I couldn't keep up with that amount of protein. And I'm far from alone in this. That's how this whole protein craze started, was people kind of paying more and more attention to these macros. And the reality of things is, you go to these different places, and if you're trying to order something that's protein centric, it always comes like 80% noodles or something that you shouldn't be eating, and you end up eating that, and it gets you all out of whack. So I think this is really like, putting the meme worthy ad aside, this is kind of the demographic that I think Sweetgreen is trying to appeal to, and it kind of strikes home to me because I've legitimately been that person. So I am going to go to Sweetgreen. There's a Sweetgreen right across the highway here. There's one very close. So I'm going to have to go try this for myself today and just see, what does this come with? I think it's mostly a chicken bowl with some quinoa under it. Can I even eat the whole thing in one sitting? We'll see. I didn't go to the gym this morning, so I'm not terribly hungry. But I have to interact with this firsthand, because this is part of a broader discussion that's been going around on these fast casual restaurants. So I wanted to put up a chart on stock prices of different restaurants and kind of looking at the ecosystem that Sweetgreen lives within, and in this broader sort of like protein race, if you want to think of it that way. And frankly, it's been a rough year.
Yep.
It's been a really rough year. And so what you can see here is, you look at Shake Shack down over 35%. Then you look at Chipotle down over 48%. This is year to date. You look at Kava, which is probably the most similar one to Sweetgreen in terms of being a little healthier, serving bowls with vegetables, down over 60%. And then Sweetgreen, this is not a competition they would want to win.
No.
Down,
Bryce, I think we're on let's do the year-to-date numbers.
Oh, yeah, we got to get year to date there. That's right.
There we go. Boom.
So we're down over 80% year to date for Sweetgreen. So I'm going to go ahead and have to call a bottom here. I feel like this is actually a different demographic that they can start to appeal to by having healthy meals, no seed oils, and then actually there's a value proposition in being the best dollar per gram of protein out there, where you know it's not going to come with a bunch of other stuff that you shouldn't have been eating. Like you're going to eat a bunch of protein like at a Mexican restaurant, but then you got the chips and you got the dip and all this other stuff that you're eating there. And so to me, this actually starts to make some sense. I feel like they could break through a little bit this narrative of like, the consumer is tapped out in America and there's nothing left here. You've had some of the insiders buying. Interestingly, they've also spun off recently a piece of their business called Infinity Kitchen, which was focused on automation and speeding up and reducing costs to produce these bowls. So they've spun that out, sold that for about $100 million, but they retain access to the technology at cost plus 5%. I thought that was an interesting play, because you bring some liquidity and some cash in to offset some of the issues they've had with lower sales. That's what's been driving a lot of this stock pullback, is that sales, same-store sales, have been going down, down, down. So this feels to me like actually an interesting ad, and I just reacted like, that's a legitimate product I'd be interested to try. So like I said, I'm going to have to go give this a shot today. It's happening today, and I'm going to go ahead and say, this is actually, I think, something that will prove to be effective in the market. Let's see how it plays out, but at least give Sweetgreen credit. They're not just kind of sitting back and riding this thing down. I think they're showing like a willingness to really be innovative, try something different, spin off a business unit, bring in some liquidity. So I'm kind of rooting for Sweetgreen. I feel like the market's been pretty unkind. We're going to move on now to product proving ground. This is something new that we want to do, where we get to see new things out in the marketplace, talk about what works, what doesn't, what we like, what's new, and what better way to do that than to bring in someone from the younger generation, JBA, who's out there trying all kinds of stuff, and I think has something interesting to talk about. What are you seeing in the market? What caught your eye, JBA? What do you think's out there that people should know about?
Well, as I am on, crypto Twitter and tech Twitter and all the other forums out there today. Saw this come up in my feed. Thought it was really interesting. I'm always kind of interested in seeing new publications that are talking about tech and crypto and so on, all the things that I keep up with. Really kind of an interesting new magazine. And so I went to Barnes & Noble the other day, picked it up. And so they have Gemini sponsoring the back with their new Bitcoin reward credit card, and then also Perplexity marketing their new web browser name Comet. Now, if you haven't used Comet, you should. It's really rather interesting. Web browsing has definitely changed forever. And so if you're anybody out there who's keeping up with all this stuff, who's on these topics, you definitely need to go check out Arena. It's really rather interesting. You have a Palantir ad in here. You've got some really big players in here, buying Splots. So I would go so far to say it's rather new, but I think it's going to be a decent player in the space. So.
Yeah, I was struck as well that you can tell they've taken a lot of care with the magazine. I long ago stopped reading any kind of magazine because it just kind of became irrelevant.
Ads.
It's
just
like
ads.
Corporate slop. And so they made it look really pretty, and you're referring to these ads because even the ads look nice.
Yeah.
Yeah, I mean,
in this magazine.
They're classy.
So,
Yeah.
Like the whole thing is sort of like you can tell people cared about this and invested in it.
I mean, if you take a look at the back here, obviously you see this poster around every big city nowadays. And then I'll show you the spot here where they're showing they're off their new web browser here. So kind of interesting. Yes, I mean, and also the ads are the product you're looking for anyway. And versus some random product that you don't want to see.
Consumer product. Yeah.
Yeah.
I mean, the website is crisp. It's clean. It's all about, tech, policy, science, civilization, capitalism. I mean, goodness gracious, cool stuff here.
It's been nice to see a publication that's kind of coming forward with this unapologetically pro-America, pro-reindustrialization, shining a positive light on private industry and innovation. It's been bizarre to watch so many other publications that in theory are like business publications just kind of go into like a doomerism loop of there's nothing we can do. Here we're going to have another article about how China's expanding. And it's just like, I don't need to read this in my life.
Yeah.
So it's just been nice that rather than just kind of have misplaced optimism, really shining a light on interesting companies that are up and coming that are actually building this new ecosystem. So,
and you'd think that Arena is a sponsor of the show the way that we're talking them up. But no, this is just this is a segment. Bryce is going to talk some things. I mean, sometimes we're going to, rain on the parade of whatever product he's, depends on if it's a good or bad product. So.
Yeah, it's kind of that live look of you're out, you see something, it's interesting, you either like it or you don't, but you get an honest look at like seeing this out in the wild in the real world. So I appreciate that.
I'll try not to bring stuff that sucks. So.
Yeah.
No, but we want to rag on some stuff sometimes.
Sometimes that
We
is
get
useful.
a bad product in here. Speaking of bad products, man, I'm excited to bash on this OpenAI thing. But before we do that, we're in the Texas markets brief. Steve, tell us a little bit about what Google's been doing, and Bryce, I think we've got an image to pop up here too.
Yeah, so big announcement from Google this week, $40 billion investment in the state of Texas, primarily around the data center build out. And you see them here sitting with Governor Abbott. You've got the Texas Economic Development organization behind this, the CEO, Sundar Pichai of Google there. So big announcement. I want to highlight, though, what's important in this is there's been kind of like some negative press around data center announcements. People kind of default to this is terrible and energy prices are going to go up and it's an extractive industry. And I'm not saying that everywhere and all the time that isn't the case. But what I think is interesting about this is in addition to it being the largest investment ever from Google and any of these big tech companies in data centers in Texas, is a specific focus on bringing more energy generation. So they noted, and I want to read a little from kind of the company's internal announcement, that as part of the $40 billion investment, this is part of Google's Investing in America initiative. So this is kind of a whole new way, like approach to deploying capital that they're trying to build up. quote from Governor Abbott, "This is a Texas-sized investment in the future of our great state. Texas is the epicenter of AI development where companies can pair innovation with expanding energy." So again, I want to highlight there, expanding energy. So the new kind of, I think, emerging agenda here is coupling the data center build out with actually expanding energy. So what does that look like in this case? It says Google is committed to responsibly growing its infrastructure by bringing new energy sources onto the grid, paying for costs associated with its operations, and supporting community energy efficiency initiatives. In Texas, this includes a new $30 million energy impact fund to scale and accelerate energy initiatives. That's a little vague, so we need to keep an eye on like what does that mean, new energy initiatives, but let's give them some grace. I think that's a material investment in trying to bring more energy innovation.
Hopefully that means they're building a power plant.
Here's the more, I think, concrete part of that, though. And they say, along with over 6,200 megawatts, so 6.2 gigawatts, an enormous amount of energy, of new energy generation and capacity contracted to date through power purchase agreements with energy developers. They specifically point to their Haskell County data center, which is in West Texas, will be built alongside a new solar and battery storage plant. And so that's two things: a firm commitment to like an actual amount of megawatts. That's a huge number. I mean, 6.2 gigawatts.
That's like 7% of the max capacity of the grid in Texas right now.
So it's a very material investment. And the second part of that is the combination of solar, which has been booming in West Texas for some time now, but also the battery part of that, which makes this more of a dispatchable energy resource, a base energy resource. That's at least, I'm sure, what they're going for. Because I think the valid critique has been, if you just do a power purchase agreement for some solar energy that you didn't build, but you're running this power plant 24/7, someone's got to build that other part of the puzzle there. And so you can't go around claiming that you actually built that generation. So I think this is, in my opinion, a welcome evolution of this, of when you announce a big investment in a data center, that's great. We need that to power the tech economy, but then also coupling it with the additional energy that's going to be brought to the table for this. I do think that this is a winning combination for the state of Texas. I hope to see that more and for people to start to appreciate that this is a net gain for the whole economy and for all end users of the grid, which affects all of us. And I'm going to encourage Google, like, keep pushing that forward with concrete announcements like they've done today. So well done on that front. And then I look forward to seeing how they deploy that $30 million energy impact fund and what does that look like. And hopefully this kind of anti-data center kind of emerging movement can start to have some valid concerns. I'd say valid concerns, have them addressed, and we can all come together and say, hey, this is important for the country, for the state, and for the economy.
That's right. Yeah, and I think what we'll see is, the doomerism around energy consumption and water consumption. The thing that people don't understand is the way that you overcome those things is you invest and you innovate and you find more efficient ways to use energy and you find more efficient ways to use water.
Yep.
I think Google's probably going to be one of the first that takes brackish salt water from near the coast and desalinates it and uses it in data center applications. It doesn't have to be that clean.
Right.
It's not like it's potable water, right?
I'd cheer it on. I have to say, though, the water complaint is one of the strangest ones because in terms of like overall water usage, this is just not a needle mover.
Right.
And it's a little bit bizarre that that's taken on so much momentum.
It really is. We should be talking about our lawns first, right? Before you start talking about taking down a $40 billion investment because of water consumption, let's just get 10% more of folks to put artificial. We should really be just subsidizing artificial turf for people's front and back lawns because that is where most of the water consumption in Texas is today.
And you see like all the time, massive overwatering.
Lawns.
Then you get the evaporation if you do it in the middle of the day.
Yeah.
So it's just like this massive waste. I'm not saying the government should go around and impose on everyone and order you what you should and shouldn't do.
But provide a little bit of a subsidy to put some turf in. I mean, the turf companies love that. But that really does save billions of dollars because we're focusing on investing a lot more in water. And if we're using like 55% of our total water supply on watering lawns, just to me,
that's the actual discussion.
Mind-blowing.
If we're going to get into that and start blaming the data centers, you got to talk about this other side.
Yeah.
Because it just doesn't make any sense.
Green lawns look good, but
we put some of that turf into our house. The kids love it. So
turf is amazing.
We're pro turf now.
Pro turf.
All right. Well, very good. So we got something to work on that. Great. So we wanted to move on here to Lone Star leaders and highlighting something going on in the state of Texas from a leading institution. And this is one that we've spent a fair amount of time on already, but it's well deserved, which is the Texas Stock Exchange. And there was a really good article about this. I think we can at least put up the headline here. In the Daily Economy, this is a publication from the American Institute for Economic Research, and you can check this out at thedailyeconomy.org. You can read it for free. I like the graphic here of like the Texas Benjamin Franklin with the cowboy hat. Well done. And they're giving credit to Gemini there for helping to generate that image. But the headline here is Meet the Texas Stock Exchange. Wall Street finally gets competition. So I wanted to read a little bit from this. Won't read the whole article. I encourage people to go check it out. But the Texas Stock Exchange aims to reintroduce competition into a sector that has grown listless and increasingly consolidated. It's undoubtedly true that the existing exchanges have played a crucial role in maintaining transparency and corporate accountability. Their listing standards have strengthened governance and investor protections. Yet those same regulatory frameworks have also drifted into areas far removed from financial performance. In recent years, both the New York Stock Exchange and NASDAQ have woven social and political priorities, what critics describe as wokeness, into disclosure and board composition rules. What distinguishes the Texas Stock Exchange is not a break from federal oversight, but the SEC will supervise it under the same 1934 Exchange Act, but a fresh philosophy of exchange governance and staying out of kind of dictating to businesses and letting them focus on profitability, innovation, shareholder value. For issuers, the advantages are procedural rather than ideological, less bureaucracy, clearer guidance, and faster time to market, all within the same legal protections that govern other national exchanges. I like the article starting to get a little bit into a discussion around, sure, we're in Texas, we love Texas, we want to support a Texas entity. Oh, okay, that's nice. But what are the concrete reasons that are driving a shift where this is a valid and logical business decision for people? You've seen such a drop in new public listings. I think we have to ask that question, and they start to highlight this, that you can retain a lot of the regulatory structure that has worked from that federal level since the 1930s, while at the same time taking advantage of what the exchange wants to do to give companies less red tape to go public. They also mentioned in the article, one of the things the exchange has worked on is to let companies start a process of looking at going public in a confidential way.
That's helpful.
And try to keep it more confidential for as long as they can, not to hide anything. Eventually you're going to go public and reports are going to be issued. It just reduces the costs and potentially the distraction of having this kind of announcement that you often see companies come and say, we're looking to IPO, and it's like more than a year before it actually ends up happening. And then that becomes a whole kind of talking point that can have really negative ramifications for companies. So just interesting to see an article highlighting that, the continued work from the Texas Stock Exchange around that, to make this pitch, not just to Texas companies, but companies everywhere, that this is just a better business decision to be a part of this new exchange. And really can't wait to see the new year where this kind of gets put into action and sort of the proof is in the pudding moment. But I remain bullish on this and appreciated the article. Thought it was well done.
Yeah, how could you not? We're very bullish, and we think everybody should be. Now we're moving into the Ask the Market segment. This is where we're going to throw Kalshi up on the screen, one of our favorite prediction markets, and go through and talk about some of the contracts right now. Of course, the Fed decision in December is weighing heavily. We've moved up a little bit. The chances for a 25 basis point cut are, improving a little bit, right? We're above 50%. The exact chance for it to be cut by 25 basis points looks like at where are we at, 33%?
Oh wait, it inverted.
It
while we were on
inverted
the
like
show.
during the show.
Yeah.
Holy smokes!
Yeah, we're down to 33% cut. Yeah.
Wow. So we were just looking at this. Look at this move.
A few minutes ago, yeah. 30.
Right.
It went from 52% to 30. I mean, Bitcoin's going to be down. Look at Bitcoin price right now. If you're trading at this very moment, Bitcoin's down 4.4% in the last 20 minutes. Okay.
Probably not what NVIDIA wants to see going into their earnings.
Yeah, looks like the Fed is hawkish right now. Okay, let's move over, Bryce, to that picture of the different AI, the contract they have on the AI companies. So This is one where we're talking about the best AI at the end of 2025. Bryce, that one's over in Monday. Oh, you got it up already, man, fast. So this one, I'm surprised, honestly, that ChatGPT has just fallen so precipitously.
Yeah,
Steve?
and you've had something of a vindication this week. Gemini 3 just launched yesterday. And this is kind of another example, frankly, of like the prediction markets giving you a signal ahead of an event, and then the event actually comes to pass. Gemini product from Google was quick to make a big splash that on most of the benchmarking assessments out there, it is now well ahead of any other frontier model. They were a few days after Grok that came out with 4.1, and for a little bit there was advancing beyond some of the other models. And you've actually seen Grok here on this chart leap up above ChatGPT at 6% versus 4% for ChatGPT in terms of odds to be the best model at the end of the year. But the real news is that Gemini is now at 90%. I want to talk about a trend that's been going on for a while, and that's the traffic to these different AI websites. And you've seen a kind of consistent erosion of Google's, of ChatGPT's share there.
Yeah.
They had this kind of viral moment a few years ago, and we're up over 80% of all AI web traffic was to ChatGPT. They're under 75% now, still dominant. So that's not debatable, but there's been a very clear trend, and the vast majority of that incremental market share has been won by Google. And I think the real reason behind that, and what is really going to come to bear now that they kind of have this frontier model claim, is they just have incredible distribution. Almost everyone, including us, uses Gmail. And so they have a natural way through that to distribute the product. And they have YouTube, which is like the biggest source of data to continue to train the models. They're also the only company that's fully integrated where they have their own hardware. So these big data centers they're building in Texas, they're not as reliant on waiting on NVIDIA as most of these other models, because for years they've been investing in their TPU ecosystem that they've built. So if you had told me at the beginning of the year that we'd be sitting here in November at a 90% chance that Gemini would be the leading model at year end, it's an incredibly stunning development. And you see that in that chart, that inversion in that chart, and just a really dramatic change of events.
That's right. And to prove that, to drive that home even further, Bryce, throw up the screenshot that I sent you. As I was coming into work this morning, I was on ChatGPT using the voice function, so just talking to the AI, and I was asking it about any developments that were happening in Texas capital markets. And it gave me some stat about some company that was going to do some oil and gas work, and they were going to list on the Texas Stock Exchange, and they were going to, they were even doing Bitcoin mining. And what I figured out, I called it and I said, hey, are you sure? I can't find anything about this. And then it comes back to me and says, you're absolutely right, and I need to own this clearly and look at the highlighted portions. I shouldn't have told you that Gulf Energy Solutions was a real Houston-based company making Bitcoin mining moves. I can't find any credible record of Houston energy companies by that name doing what I described, and effectively I made that example up. That was a mistake, and I'm sorry.
Yeah.
Holy smokes.
That's just a shocking admission there. It's kind of creepy, too, that they come up with like a believable name, Gulf Energy Solutions. Somebody's probably trademarking that right now.
and telling me what I wanted to hear. Like, oh, they're going to go into Bitcoin mining and they're going to list on the Texas Stock Exchange. Like two good developments.
Claim.
Yeah.
Also relatively easy to check that.
Yeah.
Like that's just like an astonishing mistake to make.
And then it had to own it, like right.
This is probably the most extreme mea culpa from AI that I've seen. So we were having a real laugh this morning. I couldn't believe this was like actually what it replied to you.
Normally when it messes up, it just says, "Oh yeah, you're right." Blah 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 blah.
Yeah, here's the answer.
But I'm starting to think on the voice chat version. I don't know if Bryce or Steve, either of you have experienced this, but when you're on the voice chat, it doesn't do as deep of a dive. It doesn't spend as much time running, doing inference for the answer.
Yeah, this is true.
It comes right back at you with some very platitudinal, sort of milky answer that has no specificity and no facts.
Just throwing something out there.
So yeah, that This happened this morning, hot off the press.
Well, to y'all's point about when it comes to Google taking over with Gemini, I mean, I know when they limited the SEO to the first 10 pages and not 100 like they have for 20 years now. At the end of the day, I guess they own all the data, right? And so at the beginning, I was like, oh well, we're gonna have a lot of competitors to Google now because you have Comet, you got to have Atlas with OpenAI. But at the end of the day, who owns the vast majority of the actual data infrastructure? Well, Google's been doing it for 20 years, and so I could be wrong, but I think that's probably at the core of why Gemini is doing so well.
Yeah, no, well said. Hard to see how that trend doesn't continue at this point. And just a big week for Google in Texas and for Google on the global
general,
stage.
yeah.
So,
Don't
all
count
right.
them out yet.
We want to move on to a policy update. We try to always make time to kind of address what's going on either in Austin here in Texas from a legislative perspective or in Washington. This week we're going to cover the tension between those two places, federal and state regulation, particularly as it pertains to AI. I want to start by reading a recent post from President Trump. This is, I think, something I could only describe as like classic Trump posting. I don't see a time here, but I feel like he probably posted this at like 3 a.m. or something. He says, investment in AI is helping to make the U.S. economy the, quote, hottest in the world. But overregulation by the states is threatening to undermine this growth engine. Some states are even trying to embed DEI ideology into AI models, producing woke AI. Remember Black George Washington? We must have one federal standard instead of a patchwork of 50 state regulatory regimes. We can do this in a way that protects children and prevents censorship. It'd been a while since I thought of Black George Washington, but that was like a height of absurdity moment. But you have this coming on the heels of a couple of months ago during the Big Beautiful Bill discussion. This was attempted then to basically preempt all state regulation of AI. And I think going into that, the expectation was that this was like a Republican-Democrat issue, that it was about preventing Democrat-controlled states. But then what you actually saw was a lot of the Republican states, including many in Texas, were the ones kind of voicing like, hey, we're the United States of America. And we have a distributed, federalist system of governance, and states often also have a duty to their citizens to regulate something if they perceive it to have a threat. That ended up failing in the Big Beautiful Bill. It was stripped out, and as I recall, it was almost like in the Senate, it was like over 90% voted in favor. So it wasn't even close.
Yeah.
So now we're coming up on an appropriation bill, I think, for the military, and this debate is coming up again. And I wanted to highlight a statement of response from Governor DeSantis out of Florida, because I think he characterized what a lot of people, a lot of governors around the country were responding to this kind of outlook from a federal perspective. He says stripping states of jurisdiction to regulate AI is a subsidy to big tech and will prevent states from protecting against online censorship of political speech, predatory applications that target children, violations of intellectual property rights, and data center intrusions on power and water resources. The rise of AI is the most significant economic and cultural shift occurring at the moment, denying the people the ability to channel these technologies in a productive way via self-government constitutes federal government overreach and lets technology companies run wild. Not acceptable, he says. I want to take a step back here. I feel like two things can be true, and we're getting a little bit of like extremes on both sides. So the first part is it would be a pretty radical precedent for the federal government to say we're going to preempt all regulation of a particular industry, just all of it.
Especially stuff that pertains to constitutionally rights that were given to states to govern, such as, kind of these public safety concerns.
Yeah.
The federal government has never regulated anything to do with public safety. That's why, the police force in your city is not run or operated by the federal government.
Yeah, that's right.
And every state has their own penal code.
So this is a very good point. So you're coming up against that precedent that's been in place for a long time. In addition to many states have already passed regulations that are in effect right now, including the state of Texas. And so I think to blanket state that we're just going to disallow that is really probably just not something that is, from a pure legal standpoint,
Certainly unconstitutional.
it's just not going to
Certainly.
fly. Even if you did do it, you're immediately going to be in various and different lawsuits, and it's going to create this whole. So my suggestion and thought around this is be a little more concrete in terms of laying out what this federal agenda means, and then recognizing that there are probably some areas where there are legitimate concerns from the states. I'll just give a simple one here in Texas. The state of Texas wants to create a code of ethics for government entities in the state of Texas. They have to abide by that code of ethics. The law itself says that it will align with prior guidance given by the federal government. But that guidance wasn't law. So the idea is to make it law in the state of Texas so that government entities here have a code of ethics that they abide by, and not some code of ethics made by the United Nations or the World Economic Forum or who knows who. Most Texans support that. It passed with bipartisan support here. I don't think it's terribly controversial. And so I would suspect that even probably President Trump or a lot of his supporters would say, yeah, that's reasonable that the government itself would have a code of ethics for the use of AI. Okay, well, then we shouldn't make statements that we're going to just preempt all
Right.
AI regulation. So on that note, I wanted to read kind of another post from Governor DeSantis because he gets into this. Somebody had made a post saying, replying to the governor after he had said, not acceptable. We can't have this federal preemption. He says, Governor DeSantis, you're opening the door to let Gavin Newsom and Sohran Mamdani run America's AI marketplace and decimate our nation's ability to counter Chinese advances. And Ron DeSantis replies here, then do a narrow preemption blocking the specific California policies that are so objectionable. Don't impose a 10-year moratorium on Florida and other like-minded states that takes away our sovereignty. So I think the governor's starting to strike some middle point here. Let's have a discussion around what the state of California is doing. And personally, my biggest concern, and I think the position of Texas would be, we don't think that a state or even the federal government should have a permitting regime where companies have to go and get an approval or basically ask permission to be able to develop an AI technology, because you have a web of bureaucrats that are determining what is and isn't allowed based on some ethical framework that is dubious at best. And I think there's a real risk that California is going down that road. And so I'm very sympathetic to that concern. I would have to agree with Governor DeSantis here. Okay, let's name these specific areas that there should be a federal preemption, and then allow states to manage in the rest of that. I hope that this starts to go in that direction. Right now, I think most of what we're getting is the federal government saying, don't do anything, the federal government's going to handle this, and states saying, no, it's states' rights and you can't do anything. Well, I don't think it's either one.
Yeah.
And we need to get into talking about governing and not just kind of headline swapping here.
Yeah, if it relates to public safety, the states are constitutionally permitted to regulate that. Now, if it relates to interstate commerce, which AI certainly is, the federal government for 200 years has had the authority to regulate interstate commerce. So I don't see why. I mean, it's funny to watch them go back and forth on Twitter with like the most non-nuanced statements out there. But this should be narrowly scoped to prevent states from regulating commerce, the development of models, a licensing regime that would slow the development of these models. That is appropriate.
Yep.
But telling states they can't protect their citizens from technology or social media or, that's inappropriate.
Yeah. No, I agree. So it's far more to be said on this because it's clear that this is going to become a big discussion on the next appropriation bill. So expect it to be hashed out very much in public.
That's right. And now we're moving to our last segment, Market Questions Live. We've got people who are watching live who may have some questions. Bryce is looking for those. I do see one or two here that have popped up. Bryce, are you seeing any from other channels?
No, I'm not, actually.
Let's see. One of them here, Steve, I'll let you take this one. Do you think Texas can really peel away IPOs or secondary listings from the coasts?
Yeah, I mean, the short answer is I do, but I also have a respect for this this has been tried before. I think Miami had an exchange. Chicago, of course, for a long time had a stock exchange that was actually one of the ones that I believe NASDAQ had an exchange there that they moved down here. And so you've had exchanges in Philadelphia for a long time, and they've all kind of concentrated into this duopoly that's so well established. So that's my way of saying I understand the general reticence to just kind of accept, well, a new player is going to come in and disrupt this. I think, however, the reason that I am expecting a successful outcome for the Texas Stock Exchange, not just in dual listings, but in winning IPOs, is that in the recent history, there's been just frankly an implosion of activity at the New York exchanges, and it's not as if all of these companies are saying we love the way being a public company is right now, and there's no opportunity for disruption there, due frankly to some of the regulatory failures and the choices that those jurisdictions have made that have presented real legal challenges that we've talked about on this show for companies being a public company. In addition to, even in the not too distant past, you didn't have such a share of the American economy being here, right? So I think it made a lot more sense 40 and 50 years ago, where you had so much more of the financial activity concentrated in a New York or even in a Chicago. And that's changed a lot just in recent times, and it's only accelerating. So for all of these reasons, I really do expect more IPO activity to be won by the Texas Stock Exchange. And frankly, also, it's going to be interesting to see how the kind of branding and deployment of the New York Stock Exchange Texas and NASDAQ Texas
differentiates.
Yeah, like what does that actually mean? Because I think they're still trying to figure out that messaging themselves. And so you've already got that core building up here, but I do predict and expect that within 2026, there's going to be an IPO
Oh, for sure.
made, done, run
Right here
in Dallas. And I think that will happen, even though other people have claimed they're going to do it before and haven't been able to do it. I think this time it's going to get done.
I agree. I'm going to keep JBA on his toes here. Bryce, if you could go back to the Texas markets brief segment, there was a few slides in there that I wanted to talk about that hit directly on Steve's answer. So the one about population growth, particularly the one that has the green and the red indications of which cities are growing. Any of those. Yeah, boom, there it is.
we go.
Okay, this has been making the rounds, but guys, look at this: a 98% growth in the number of children under the age of 5 that live in Austin.
That's wild.
And I think this is a 10-year period. And the losses for San Francisco, New York, and LA are staggering. So even just by population growth, Dallas-Fort Worth is up 81%, Austin's up 98%, and all of our rival cities are down, between 38 and 34%. Now, compare that to, Bryce, I'm going to ask you to switch over to the GDP growth. There's a figure with GDP growth numbers here.
Yes.
Let's
Let's
see.
see. Find it.
With the U.S. is green, kind of different shades of green. 141% GDP growth in the last 21 years in the state of Texas.
Wow.
141%. And if you look at, now, of course, GDP is growing everywhere. But if you look at some of our rivals, like, for example, New York is at less than half that, 65%. Philadelphia or Pennsylvania, 50%. Connecticut, 35%. New Jersey, 47%. We're double, triple the GDP growth in the last 2 decades as some of those states. And if you take into the fact that our GDP was already quite sizable relative to many of those states, we're talking about Texas becoming the 7th largest economy in the world in the next couple months. We're already the 8th, bigger than Canada, bigger than Great Britain, right? So I think there's some serious momentum that could disrupt the momentum that Wall Street in particular has had on this stranglehold that they've had on.
I really
public
like
listings.
those graphs because it's a simple way to think of this. Is like nobody thinks that it's outlandish or unexpected that France or Italy or these countries would have their own stock exchange.
Yeah.
Of course they do, right? And yet this economy here is bigger, and all the companies have had to go to New York to be able to raise money. And it's such a clear indication of why the time is now, and this makes sense, and the momentum is behind it. So really, really good information there.
Guys, thanks for joining us today on Texas Capital Live. We will be coming to you next week. I think one day next week it's Thanksgiving, so hope